welcome to the Market Alert for Thursday, the 20th of June 2019. So, dovish Fed sparks safe haven, a scramble for bonds and bullion as traders dump the US dollar. So, as predicted, Powell didn't reduce interest rates, and we can see that in the pre-market session there was a range of 50 points there, while the market waited to kick off. You can see prices dropping below the 200 bar moving average. We see there they managed to fight back. Here they bounced again once they got back above and then hit resistance, and this was the theme all the way through until eventually you can see there the market finding support on the 200 bar moving average, and then prices kicking off to the upside and then working their way down until we got the Fed announcement, and as I say, predicted that they wouldn't increase interest rates, and they didn't. However, they're looking for the Fed to price in a rate cut for July, and this has now given the market the optimism it needs to move higher. But notice again how all the way through here after the announcement the market sits on that 200 bar moving average and then starts to move away from it. And overnight, prices have continued to move higher. You can see there the 200 bar moving average down here. Prices banging its head at the moment against the 26,601, way above the high of yesterday, which you can see in the daily chart there. There was some selling around yesterday actually as the market attempted to move higher, and what's going to be interesting is how the market is going to actually maintain this on the upside, given we're going to have to wait another month now before we get the Fed's next move. So it seems very difficult the market can sustain moving higher, probably all the way up to the all-time high, and then when we get there then it could be a straight reversal to the downside. But there is absolutely nothing to move the market to the upside after the Fed's announcement yesterday, only the hope and optimism that they will actually cut rates in July. So very strange. And so for me, anything to the upside, certainly up to the all-time high. After that is going to be very difficult to hold on the upside there. Meanwhile, in the implied volatility for yesterday, we were 1383, as we can see there for Tuesday, and Wednesday was 1222. So a drop, significant drop, which again actually adds into the market moving to the upside. That's fine. If this can get down towards the 10% area as the market heads up to the all-time high, that would be just perfect, because the low volatility is an indicator that there is going to be a significant increase. As you see here, when we get down to the 10% area, the market will move to the upside. So this is fine. Watch the market move to the all-time high. Watch the implied volatility move lower. Then they've got to wait for Powell, and then we'll see how the market reacts from there. So in the pound for yesterday, we see the market moving higher as we get closer to finding out who the next Prime Minister is going to be of the UK. It looks like Boris Johnson at the moment. Also, Carney was out again yesterday speaking. Watch the 76% retracement if this moves higher. There's definitely a drop-off in volume at the moment in this market, and you can see there yesterday again, now the 200 bar moving average, once prices were above this, they continue to move higher. Also, of course, taking into account that as you saw the headline here, that the dollar, as traders dumped the dollar yesterday, you can see there that this has had a benefit for the pound, and it's moving higher as well. So news today: retail sales for the UK to show a decline, and official bank rate for the UK to remain unchanged. There's no way they can increase interest rates, absolutely no way. And you can see this here, MPC votes 009, that means to leave rates unchanged. it's they're never going to be able to increase them again, because it would just spark a massive recession. The credit card debt, the personal debt, the car loan debt, any increase in interest rates, and also on the national debt, would be an absolute burden. So it's not going to happen. This is the new normal, as it were. Carney's speaking at 9 p.m. again tonight, so we'll see what happens with the markets after they close as well when he speaks. Meanwhile, Bitcoin continues to hold its own and is starting to move back towards the upside as well. Watch for the market breaking out to the upside above this high here, 9496. It's giving all of the sort of price action there that it's likely to break to the upside. So we'll see how that fares there as well during today. Let's have a look at the yesterday again. Here's that classic coming down, banging its head against the 200 bar moving average. Once it breaks it, instead of going short when it breaks, wait till it comes back and bangs its head, and then it moves to the downside. The same on breaking on the upside, comes back, and then you see it move to the upside there as well. And at the moment currently sitting above this and moving back to this high that we looked at here in the daily chart, this one here. So bullish for the Bitcoin market there as well. And then finally, Deutsche Bank yesterday, again gapping up above the 200 bar moving average. Let's see what happens when it comes back below this. It's been a good week for Deutsche Bank as far as the share price is concerned. Dead cat bounce in progress at the moment, as they are attempting to move prices to the upside, but keeping an eye on the 640 there. Also, somewhere here, not to this one, there is a news item where they talk about, there you go, Feds investigating suspected money laundering and violations at Deutsche Bank. Apparently there's a whole raft of litigation going on at the moment and scandals with Deutsche Bank, as it says here in the, there you go, myriad of civil lawsuits and criminal investigations. So yeah, it's not looking good for Deutsche Bank. So anything they can do to pump it to the upside is going to be of a bonus at the moment for them. And the yield curve continued to move low. I'll have a look at that in a few days' time. It's inverted, remains inverted. And that is, as I've said before, a very good indicator of a recession coming down the line. And also, again, this is alluded to in a lot of the articles on Zero Hedge as well. They're talking about this as well. But as ever, just to pick them up and find them is very difficult, because there's... oh, there you go. No, that isn't the one. Yeah, anyway, there are plenty... of articles talking about this, and in particular because of having to cut interest rates as the stock market's on its highs. That's unprecedented. They don't do that, so it just shows you that behind the scenes something isn't quite right. That's for sure. Okay, that will do it for this one. If there is anything to report, I will let you know, but otherwise, as ever, thanks for watching. See you in the next one.